Welcome to TradeTheMBI.com. This is John's reports for the 19th of May. No surprise at all. Pushed up to the highs. And again, we had talked about this being the ultimate pain trade in the sense that, despite what everyone sees from a economic standpoint, market continues to drive higher. And, I've talked about it because it was mostly about treasuries, interest rates, and the fact that the market was underperforming what you could get from treasuries. That wasn't going to last for long. And that really built the impetus of it. Also, we had seen the MBI readings here with the magenta rising and no real strength on the DOC from a short standpoint, and that orange began to fall. And you've created everything needed from a buy configuration, including green rising above. Now, pivot lower there would change it, but we've got pretty good strength on the shakeout here. Close on the extremes, yellow. When we get a sell signal, that would be the likely fillback location. No real shock with that. And the real power, as we've talked about for a while now, has been the NASDAQ and the continued strength from an MBI readings on that, and sort of that bifurcation between the two markets where the NASDAQ is really driving things, and that push was going to be enough to lift the S&P in general. Does it change any of the real economic concerns that exist? No, but overall, the economy's been plugging away, so all the doom and gloom uh, predictions just fell on deaf ears, at least from a practical standpoint. Again, I think it ties to oil. As long as oil continues to hold in a lower range or even break down, it's going to help the consumer and keep stabilizing business from that standpoint. From a TLT standpoint, you can see we talked about this, the expectation for the move to the 0% and getting closer by the day. And this was that projection of, a lot of bond traders that the Fed would be forced to ease, and instead they didn't do that. They just provided additional liquidity on the banking issue, but maintained their stance that they were going to keep rates normalized. And for all intents and purposes, they've done it, albeit a strange approach to doing it. It worked out. So it's hard to argue with success. Everyone had their disbelief about the Fed actions, and it's worked out okay so far. And then there's oil right here, still holding in that bottom range of where we were from, well, beginning of the year. And if it can stay below that, that's becomes critical. And so you can see the little bit of decline of the MBI reading here of magenta. It's still above the yellow. You've got some rising short, so there's still a little bit more of a bullish push towards it. But will we see anything in the lower range? Not unless production increased significantly. And what would be the justification for that is not a whole lot. There's no incentive policy-wise to have that being taken, as a idea. So the idea has really been to limit at least domestic production. So we're going to be in an elevated state for some period of time. It's just a question of how elevated, and if you can keep it in that between 60 and under 80 range, I think that will allow things to continue, particularly if there is some slowdown in certain areas. Energy prices become a critical element of that. Euro continuing its softening, but still well within the range that they've been looking for. So this was quite the move in the expectation that the U.S. was going to ease, and when that and now clearly is not taking place, then the realization that, wow, relative to European growth and that the U.S. is still quite a bit stronger. This is way elevated to what it actually should be, but at the end of the day, where it is the current state of things. And this is one of those where you can have an expectation, but the reality is you got to trade what is, and not your perception of where things may be. From a gold standpoint, you know it's filled back because of the decrease in inflationary pressures and nothing per se on the world scene that's causing a hyper concern. So right at the 50%, we've got a fade here in the short, so should be able to hold right around that level. Still continued pretty negative from an extreme histogram standpoint. So that poses its own soft appearance, but you're also getting a full reset. We're getting close to an automatic turnaround. I mean, you've got green DOC already minus 25. And the fact that that's happening right at the 50% means even if you get a slight variation below, it should move right back above it. Bitcoin in that, again, nothing happening with the crypto space at this point. Pretty much what you see similar to the gold setup, and it's just hovering now. You've kind of shaken out again your weak hands, profit takers from the initial climb. Uh, and the readings are good enough that should be no reason why it doesn't hold, if not move slightly higher. From a 50K standpoint, you can see that rise, little plateau, bump again, come back. So, your classic ABC you know, setups continuing to move from there. And it's been pretty strong. A lot of positive extremes, though, particularly on this most recent push. But again, it's going to take a significant sell signal for those to fill back in place. It wouldn't take much for them to do it. But right now, you've got a counter trade going, and as long as you've got enough shorts to keep propelling it, that's what the market does. It looks for that. From a 5K standpoint, it was fairly mediocre until midpoint in after the pre-market action, and then we started to get the natural wave. We had a little sell-off, and then it spiked up, and then once the spike took place, then it was just a matter of filling back some of the positive extremes and continuing the press. So fairly healthy overall, and a strong end of day. We're seeing a lot more of this end of day uh, rally push after things being flat, and then we look at this time, of course, moving into post market, it just gets to be a sideways, but it's still slightly positive. It's the only annoying thing about a time chart. It doesn't really give us the, I want to say, the compact sincerity of what the move is. You would eliminate most of these candles, and it would just look like a small little up down and be close to where the pre-market high was. So, all things being equal, market's behaving pretty much as the reading suggests. So, nothing of a major shock from that standpoint. As always, though, I'll continue to update you with anything relevant in the Skype chat. Trade well. Talk to you later.